Welcome back to Global Power Play, your go-to source for the latest global political news. This is our weekly recap, where we bring you all the biggest stories from the past week, covering key events from the US, Europe, and around the world. Sit back, relax, and let's dive into this week's most important updates. Every day, over $2.5 billion in goods and services cross the US-Canada border, underscoring the deep economic interdependence between the two nations. However, recent US trade policies are challenging this relationship, raising concerns about their potential impact on Canada's economy. Presentation of Problem Tier Challenge. In March 2025, the US imposed 25% tariffs on Canadian steel and aluminum imports, citing national security concerns. Subsequently, a 25% tariff was also applied to Canadian automobiles. These actions have disrupted the Canadian manufacturing sector, leading to production slowdowns and job losses. For instance, Canadian auto workers are facing significant uncertainty, with factories like General Motors in Ontario cutting shifts and idling production for US-bound output. In response, Canada has introduced its own set of tariffs on US goods, aiming to pressure the US to reconsider its trade policies. Exploration, development. The impact of these trade policies extends beyond manufacturing. In agriculture, Canadian farmers are concerned about potential US tariffs on agricultural products, which could limit their access to the US market. The technology sector is also feeling the effects, as tariffs on imported components increase production costs for Canadian tech companies. Additionally, the uncertainty surrounding trade policies is causing Canadian investors to reconsider their investments in US real estate, potentially affecting the US economy as well. Climax key moment. Amid these challenges, Canadian Prime Minister Mark Carney has pledged to negotiate a new economic and security relationship with the US, emphasizing the need for a stable and fair trade partnership. This development marks a significant turning point, as both nations seek to navigate the complexities of international trade and maintain their economic. For decades, the US and Canada shared a dependable energy relationship. Canada, the good neighbor providing oil when the US needed it most. But recently, Canada has pivoted. In a surprising move, the country is turning away from its longtime partner, the US, and striking lucrative deals with countries like China and India, leaving the US in a tight spot. Just 3 weeks after Canada redirected oil exports, 11.4 million barrels were cut from the US supply, sending shockwaves through the global energy market. Meanwhile, US gas prices have shot up as refineries are operating at just 71% capacity, down from 89% a month earlier. For Americans, it's like driving through California and watching gas prices rise to $5.25 a gallon. It's a harsh reality when you realize you may not have enough for even a cup of coffee. But it's not just gas. Everything from steel to food is getting more expensive. In Michigan, steel mills are paying 22% more for materials like coke, and prices for vegetables and beef are through the roof. This price surge is creating a real tsunami of inflation. Yet while the US economy is struggling, Canada is signing massive energy deals, especially with China and India. These countries aren't just paying more for oil, they aren't imposing the political conditions that the US often does. Canada's energy strategy has changed. With projects like the Trans Mountain Expansion, TMX, Canada now has the capacity to transport up to 890,000 barrels of oil per day without US involvement. The shift was a direct response to US trade tensions, and Canada has quickly capitalized on it by signing long-term contracts with Asian nations. These contracts are worth 325,000 barrels of oil per day, each lasting for 15 years. The US should be worried. Experts predict that if Canada continues down this path, the US economy could shrink by up to 0.8% by the second quarter of 2025. Major industries from steel to food are vulnerable to rising prices and shortages. Can the US really replace this supply? Canada is now showing its influence in the global energy game, and the US is feeling the consequences. But the energy game isn't just about oil. Canada is also supplying key resources like uranium for clean nuclear reactors, rare minerals for electric vehicles, and clean electricity. This energy combo could make Canada not just a major oil supplier, but a critical player in the transition to a more sustainable future. And what does this mean for the U.S. long-term? Canada's actions signal that the U.S. can no longer take its northern neighbor for granted. Canada, once the U.S.'s loyal friend, is now eyeing stronger, more reliable partnerships. Whether in Asia or Europe, if this trend continues, will the U.S. turn to Venezuela or the Middle East for oil, or will Canada remain a critical energy partner? Imagine a world where the economic stability of the United States is at the mercy of foreign nations. As the global superpower, America's economy thrives on its massive borrowing. But what if the nations holding U.S. debt decided to play a dangerous game? Let's dive into the complexities of U.S. debt, the countries that own it, and how global tensions could lead to a financial shockwave. U.S. Secretary of Defense Pete Hegseth is in Japan on a mission that highlights the growing tensions with China. Sent by President Trump, his task is clear: prepare for potential conflict. Meanwhile, in a strategic move, China has raised tariffs on American goods to 125%. Trump has retaliated with even harsher tariffs, opening the door to talks. But one thing is clear: trade wars are intensifying. But beneath the surface of these political skirmishes lies a much bigger question. Who holds America's debt, and how could it impact the global economy? The U.S. debt landscape. The U.S. has long been the cornerstone of global finance, with its Treasury bonds being viewed as the ultimate safe haven. Investors around the world flock to U.S. debt as a reliable store of value, making it a cornerstone of global financial markets. But the world is changing. Rising protectionism, trade wars, and geopolitical tensions top foreign creditors. First on the list is Japan, holding a staggering $1.9 trillion in U.S. bonds. For years, Japan has been the top buyer, thanks to its low interest rates and a stable economy. Japan's role as the largest foreign holder of U.S. debt is not just economic, it's a strategic partnership, helping stabilize the relationship between the U.S. and Japan. Next, we have China, with roughly $870 billion to $1 trillion in U.S. bonds. China's position fluctuates due to trade wars and its efforts to diversify reserves. China continues to hold a substantial amount of U.S. debt, which provides the U.S. with critical financing. However, there's a looming risk. In a worst-case scenario, China could sell off its bonds, putting immense pressure on the U.S. economy. It's a double-edged sword, though, as such a move would also harm China's financial position. The United Kingdom, Luxembourg, and Ireland also hold significant portions of U.S. debt. These financial hubs manage billions of dollars in U.S. bonds, with Luxembourg holding around $330 billion and Ireland around $320 billion. These nations serve as key gateways for global funds, and their financial strategies are closely tied to the U.S. economy. The potential consequences of selling U.S. debt. Now let's explore the real-world impact if these countries decided to reduce their holdings of U.S. debt. If China or Japan were to start selling, it could trigger a sharp rise in U.S. interest rates. The U.S. government would face higher borrowing costs, which could lead to a slowdown in the economy. The ripple effect would be felt globally, from stock market fluctuations to a weakening dollar. But here's the catch. No one wins in this scenario. Countries like China and Japan would face significant losses on their remaining U.S. bonds, and the global economy would experience a turbulent period. The real question becomes, how much influence does this debt give these foreign powers? Could they use it as a political weapon, or does global interdependence prevent such a drastic move?
In a recent escalation of the U.S.-China trade war, the United States has ordered Chinese airlines to halt deliveries of Boeing planes and suspend aircraft-related equipment purchases from U.S. companies. This comes alongside the imposition of tariffs up to 145%. China has responded by instructing its airlines to stop accepting Boeing aircraft, mirroring retaliatory actions from previous U.S. administrations. The trade war and Boeing's challenges. The trade war between the U.S. and China has extended its reach to the aviation sector. China's Civil Aviation Administration, CAAC, has ordered Boeing to halt deliveries, triggering a sharp drop in Boeing's stock, a 9 to 10% decline in just a few days. Boeing has 4,500 aircraft orders globally, with 1,200 of those connected to Chinese airlines, representing 26 to 28% of its orders. These deals are worth around $10 to $12 billion annually, including long-term maintenance and spare parts. If China continues to block deliveries, Boeing risks losing billions in revenue. Economic impact. The impact on the U.S. economy could be devastating. Aviation exports account for $130 to $140 billion annually, with 15 to 18% of that coming from China. Losing this market would result in billions of dollars in lost revenue for the U.S. economy, affecting thousands of companies across 50 U.S. states that are part of Boeing's supply chain. If this continues, 5,000 to 10,000 jobs could be lost by the end of 2025. China's retaliation and the risk of Airbus dominance. In response, China may shift more orders to Airbus, which would further erode Boeing's market share in China. Airbus could announce a new order of 150 aircraft from China as early as April 2025. This could deal a major blow to Boeing's position. Boeing's strategy and potential solutions. President Donald Trump, as the current U.S. president, has shown no signs of backing down from the trade war with China, and this dispute continues to unfold under his administration. Boeing is hoping for a resolution through diplomatic channels, but for now, both sides remain entrenched in their positions. This trade dispute is not just about aircraft. It's part of a larger geopolitical struggle. Both sides are engaging in economic protectionism, and companies like Boeing find themselves caught in the middle. In the short term, China faces its own challenges in replacing Boeing. While COMAC works on its own aircraft models, the transition from Boeing's extensive fleet of 777, 787, and 337 MAX jets will be costly, requiring new pilot training and maintenance infrastructure.
When a 20-year-old opened fire at Florida State University, terrified students barricaded doors and fled across campus, abandoning chemistry notes and even shoes in a shooting that investigators said killed 2 men and wounded at least 6 others.
2 victims of deceased are deceased, and 5 individuals have been transported to a local hospital with gunshot wounds.
By early Friday, memorials of candles and flowers dotted the campus, and a school-wide vigil had been scheduled as students and faculty tried to start healing from the previous day's shooting, which sent shockwaves of fear across the campus. "I heard some gunshots and then, just blacked out after," said Carolina Sena, a 21-year-old accounting student who was inside the student union when the shooting started. "Everyone was crying and just panicking. We were trying to barricade ourselves in a little corner in the basement, trying to protect ourselves as much as we could." The shooter, identified by police as Phoenix Ikner, is believed to be a Florida State student and the son of a sheriff's deputy who opened fire with his mother's former service weapon, investigators said. Authorities have not yet revealed a motive for the shooting, which began around lunchtime Thursday, just outside the student union. Officers quickly arrived and shot and wounded the gunman after he refused to comply with commands, said Tallahassee Police Chief Lawrence Revel. "The 2 men who were killed were not students," said Florida State University Police Chief Jason Trumbauer.
"The 2 deceased are not students,"
adding that he would not release additional information about the victims. The shooter obtained access to a weapon that belongs to his mother, who has been with the sheriff's office for over 18 years and has been a model employee, said Leon County Sheriff Walt McNeil. Police said they believed Ikner shot the victims using his mother's former service handgun, which she had kept for personal use after the force upgraded to new weapons. 5 people who were wounded were struck by gunfire, while a 6th was hurt while trying to run away, Revel said in a statement Thursday night. They were all in fair condition, a spokesperson for Tallahassee Memorial Healthcare said. The shooter was a long-standing member of the Sheriff's Office's Youth Advisory Council, the sheriff said. He has been steeped in the Leon County Sheriff's Office family, engaged in a number of training programs that we have. so it's not a surprise to us that he had access to weapons. As of Thursday night, Ikner was in the hospital with serious but non-life-threatening injuries, according to Revel. Witness says the suspect's shotgun jammed ambulances, fire trucks, and patrol vehicles from multiple law enforcement agencies raced toward the campus just west of Florida's capital after the university issued an active shooter alert. Aiden Stickney, a 21-year-old studying business management, was running late to class when he said he saw a man get out of a car with a shotgun and aim at another man in a white polo shirt. The gun jammed, Stickney said, and the shooter rushed back to his car and emerged with a handgun, opening fire on a woman. Stickney ran, warning others as he called 911. "I got lucky today. I really did. I really did," he said. Trumbauer said investigators have no evidence that anyone was shot with a shotgun. Holden Mendez, a 20-year-old student studying political science and international affairs, said he had just left the student union when he heard a series of shots. He ran into a nearby campus building where he said his previous emergency response training kicked in. There was a lot of fear. There was a lot of panic. There was a lot of misinformation that was being spread around. I was doing my best to kind of combat that, he said. I told people, take a deep breath. This building is secure. Everything is going to be okay. Andres Perez, 20, was in a classroom near the student union when the alarm sounded for a lockdown. He said his classmates began moving desks in front of the door, and police officers came to escort them out. I always hang out in the student union, Perez said. So the second I found out that the threat was there, my heart sank and I was scared. President Donald Trump said from the Oval Office that he had been fully briefed on the shooting. It's a horrible thing. It's horrible that things like this take place, and he said. But Trump also suggested that he would not be advocating for any new gun legislation, saying, the gun doesn't do the shooting, the people do.
But the gun doesn't do the shooting, the people do. It's, a phrase that's used.
University President Richard McCullough said he was heartbroken by the violence. Our hearts go out to our students and the victims of this terrible tragedy, he said. Another shooting a decade ago at Florida State. Florida State is one of Florida's 12 public universities, with its main campus in Tallahassee. About 44,000 students are enrolled in the university per the school's 2024 fact sheet. What do you think about this case? Drop your thought in the comment and do not forget to like, share, and subscribe.